Welcome back. I'm Pratap here. Today is the 28th March 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please note we are providing complete free training on supply demand zone price action. And all the training lessons are available at our NeoStock YouTube channel. At our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community, so click on the tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. In this playlist, you have all the training lessons are available. You just scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one, but according to my training instructions provided at our Telegram channel. I provided the link to our Telegram channel in this video description. So from the video description, join at our Telegram channel. At the top of the Telegram channel window, you can find pinned messages. And one of the pinned messages is about all the training instructions. So learn this course according to those training instructions. Then you will become a very good independent trader in the coming months. Please make use of this opportunity. Okay, now let's get into the performance evaluation of the high liquidity zones identified in our yesterday's end of the day report. Yesterday we identified 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 high liquidity zones from daily and 75 minutes time frame with the help of NeoStock software. So out of these 11, today we got 2 trades. One is a successful trade and one is a stopped out trade. First let us discuss them. After that let us look into how I fine-tuned the remaining zones. Okay, our software identified Union Bank as failed ERC as a rally base drop. This is the zone identified by our software. This is the daily high liquidity supply zone. And this daily high liquidity supply zone is fine-tuned with 75 minutes time frame. In the recent price action, there is a rally base drop and follow-through candles are created. And this 75 minute zone again fine-tuned with 15 minutes time frame. In the 15 minutes time frame, you have an excellent rally, base and drop candle. Within this 15 minutes, again we identified a fine-tuned 5 minute zone. Go to the 5 minutes time frame. Here you have a rally, 2 base candles and a drop candle and follow-through candles. And this is the 5 minutes area. Today we got the trade. And if you look into this fine-tuned 5 minutes area, the risk is a little above 2%, around 2.2% risk is there. That is beyond 2%. So that's why you have to fine-tune your entry. The blue color line what I have drawn, that is up to the 2% risk level. So if you definitely your trade would have been executed today. Price went beyond that blue color line what we have drawn. And this is we got the trade at 9:50 5 minutes candle. But with this candle, a 15 minute zone is formed. Let me go to the 15 minutes time frame. See, rally, base, rally. You already took the trade. After you took the trade, that candle is completed. Many times what happens, when you take the trade, sharply prices will go down. Sometimes the candle will be closed and after that prices will go down. But by the time it confirmed, by the time it closed this candle, but you already took the trade, after that the candle is closed and after that a new 15 minute zone is confirmed. Your earlier target could be somewhere here. Of course, zone structure is not clear, but we have a leg out, we have a base, but here you have some 7 base candles are there, but okay, fine. You can keep this area as a target because from here to here, the reward is huge. And the first target could be in this area, because you have a pro gap is here. Within the gap area, many times prices will turn. See here, from this area today, price reached in this gap area. Let me draw a horizontal line so that you will understand. See, touched and again prices moved. Sometimes the pro gap areas may be some strong order flows. The pro gap may not be visible in the every time in the 15 minutes time frame. Maybe in 5 minutes or maybe 3 minutes you may see a zone with pro gap. That way they will not let the prices further go down. These issues will be there. But anyway, here already a 15-minute zone is confirmed. Because a 15-minute zone is confirmed, here you have to book the profit. Maybe you may get 1:3 RR, or you may not be getting 1:3 RR till the newly created zone after you took the trade. But whatever the RR, you have to exit because there is a zone. Earlier when you planned your trade, at the time you have a very good RR here, up to here, or even up to this pro gap area. But till this 15 minutes area, you may not be having exactly 1:3. Maybe it could be a little short. But even then you have to book the profit. Whatever the profit you have to take, because there is a zone confirmed after you took the trade. So that's why you have to revise your target. You don't bother about the RR because you already took the trade. You already took the trade. After you took the trade, a new zone is confirmed. At the time, you should not stick to the RR. You should stick to your target 15-minute zone exit. Then many times what happens? The prices again 15-minute zone will push, and again this your entry zone would be stopped out. Instead of getting profit, your trade would be stopped out if you don't book the profit. Of course, today it didn't happen, but sometimes it will happen. The newly created zone might be having even much stronger order flow. The demand may completely take the supply off. So that's why this revised 15 minutes new target you have to exit. This is the dynamic target. During the live market, a new zone is created after you took the entry, and to the newly created zone you have to change your target, and you need to exit. So that way, from this blue color line, that is your entry, until this proximal line, 15 minutes proximal line, we get a profit 7,257 rupees profit, which is 5.3% ROI as per one futures margin cost. So this is about Union Bank, and there is one trade stopped out, Wipro. Wipro is a 75 minutes high liquidity demand zone. Our software identified this zone as failed ERC, as a maybe rally, 2 base candles and a rally candle. So this 75 minute zone fine tuned with 15 minutes time frame. Here you have a drop, 2 base candles and a rally candle with pro gap. This is the 15 minute zone. Within the 15 minute zone, again you have a fine tuned 5 minute zone. Here again you have a drop, 2 base candles and again rally with pro gap, with hidden body. See, all these parameters, pro gap, fine tuned zone, they are all looking positive, but unfortunately today the zone is violated. Maybe supply is much stronger than the demand. See, if a good zone is violated, means maybe supply could be much stronger than the demand. That's why this fine tuned demand zone is violated. So you have to accept, because the trade is stopped out, we have to accept that stop loss. Those who took the Wipro, maybe maximum loss you would have got 2,400 rupees. This is including stop buffer. And the negative ROI on your investment is minus 1.6%. Maybe some of you might have taken a deep entry because the risk might be beyond your accepted. Maybe for some people risk could be only 1.2%. At the time what they do? They draw an entry a little inside. They adjust the entry. That is called, we named it as fine tuning the entry. You fine tune the entry in such a way you get 1.2 risk only. If prices reach, you take. Anyway, it is violated means wherever you keep the entry, that will execute today. But your risk would have been minimized. But sometimes, if it is a successful trade, let us assume, sometimes you may miss the trade. Sometimes exactly your fine-tuned area, it will fine-tuned entry, it will reach, and then it will move. Then you will be a lucky trader on that day. See, when you are reducing the risk so much, there are higher chances of missing the entry. Today it is stopped out. Wherever you keep entry, obviously that will execute because the zone itself is violated. Suppose if a zone is giving you profit, sometimes the price may not reach up to your fine-tuned entry. That risk will be there. Risk means missing the trade. But at the same time, your accepted risk for getting the stop loss is also important. The maximum accepted is 2%. It doesn't mean everybody has to take 2% risk. Some people accept only 1.5 risk. Some people accept only 1.2. Some people may accept only 1% risk. If prices enter into that level, they take the trade. Otherwise, they leave the trade. It is all up to how much risk you are having willingness to accept. But 2% is the maximum accepted risk that we should not forget. Okay, Wipro, the maximum accepted risk today is 1.6%. Without any fine tuning the entry from this type 2 proximal till the below the digital line stop buffer, till the stop buffer. This is the maximum accepted, and the loss is 2,400 rupees. Loss you would have got maximum. So these are the two trades we got. There is one more trade. Maybe you may feel like you would have taken a trade, but there are some practical issues. That is Marico. Marico is a 75 minutes high liquidity zone. It is a drop-based drop. See Marico today, it reached here and sharply came down. But I didn't fine tune this zone. Why? Because the structures are not very clear here. Price structure, see? Rally base candle, but look into this candle. This is a big candle. Of course, this is even large, much bigger. This is a high exposure. Forget about this candle. If you hide this candle, then you understand this is like a failed ERC candle. All these are all medium sized candles, but this is a large. See, this candle is almost double the size of this medium sized candles. So that's why a failed ERC candle and a drop candle in between, no base candles, such kind of zones will be violated. But today it didn't happen to this stock. But anyway, we didn't plan any trade in this. Marico, even dynamic zones also not clear here. Failed ERC candle, drop candle, you don't have any dynamic zone here, 15 minutes. Instead you have a drop base rally is there. But after that, that is violated. If at all, if you want to draw any 15-minute zone, maybe this is the area. Is it a large candle or a medium-sized candle? If you convince this is a medium-sized candle, maybe rally, base, drop, that way you would have drawn. Next 5 minutes when you fine tune, probably here you have a 5-minute zone. You would have got this dynamic trade, but this is almost at closing hour at 2:55. But even if it is 2:55, see, it might have reached good. It might have given you good return. You have a drop 1, 2, 3, 4, 5 base candles. Or if you are convinced this is the drop candle, then these two base candles. Either way you would have got. Drop means lower wick. It might have reached the target. Maybe you would have got stop buffer approximately, I am adding. It looks like you would have got 1:4.29. That means close to 1:4.3 RR you would have achieved. Excellent, right? But you can't take this trade. This is almost last half an hour of the trading. Go to 5 minutes candle. This is at 2:55, almost 3 o'clock. Go to 1 minute exactly which candle you got the trade. At 2:55 candle, almost 3 o'clock. The last half an hour or 45 minutes, mostly you don't plan any trades as a beginner. Maybe experienced people forget about them. Even last 5 minutes also they plan the trades. Earlier I was registering all the data based on experienced person's point of view, some 6 months back. Later on I realized that many of you are making mistake, so that's why I'm tracking the results at the beginner's point of view. The complicated trades or risky trades I'm avoiding. And even these aggressive trades, I explained so many videos I have explained in lesson 21. Nowadays I am not considering, unless we have multiple price action close or the 5 minute zone is a high liquidity zone, except those scenarios, remaining aggressive trades related things I am trying to avoid. Because in the past many people, without learning the actual essence of the concept, you took aggressive trades and made a lot of mistakes, and some of you people lost money. So that's why nowadays I am not focusing on them. Last 6 months I changed my see, ultimately whatever the analysis I am doing, it is with respect to the beginner's point of view. Beginners are comfortable, experienced people obviously they feel more comfort. So that's why the rules, time to time I am revising the rules. Recently the rules we framed, there is no trades at near 3 o'clock. Last half an hour. Even we can say last 45 minutes also okay. Experienced people, they would have taken a trade, they would have got a good profit today. They won't miss. They plan even trades in last 10-15 minutes also. But I don't want to make you people focus in that area, taking risk, trades getting stopped out. After that you feel like you are losing money. I don't want. A simple fine-tuned zones, let us focus in the initial stage. Or a lesson 22 concept, lower time frame zone as an horizon to the higher time frame, because many successful trades this concept has given, lesson 22. Let's focus on them. Risky trades let us avoid until you get experience. Sometimes see, I will be showing you the examples like this, because at some point of time you need to gain experience. But until you get experience, good understanding, don't focus on this last half an hour or 45 minutes trades. Otherwise this could have been a good trade for us, right? Okay, anyway. This is a Marico which we did not take any trade. And the remaining zones, let me explain one by one. IRFC, already we discussed IRFC previously. This is a daily demand zone. Previously in one of the earlier videos I have explained, I didn't remember the video name, but focus on the earlier videos. One of the videos I have already drawn all these order flows. I remember I have explained this. But anyway, today price did not enter into these fine-tuned areas. Next, Crompton. Crompton also we discussed previously. Previously we got a trade also from Crompton. After that the CR zone is pierced, the earlier analysis. Because it is pierced, I removed earlier analysis. And as per the recent analysis, within this area I want to identify a 75-minute zone, a fine-tuned 75. But unfortunately I did not find any fine-tuned 75-minute zone here. See, rally candle, drop candle, in between no base candle, drop, medium size drop, and again large drop. No base candles here. We have some rally based drop, but all these are all violated. And the one that is violated recently, this is the one. Previously we took a trade from this zone. Let me draw the high of these candles, horizontal line. See, this is already pierced. Because it is pierced, now no more validities, I removed it. Maybe those who wants to use pierced zone strategies and you want to plan your trade plans, you can apply those lesson 28, whatever the concepts you learned, lesson 28 only, right? Yeah, lesson 28 pierced zone strategy. Whatever you learn, apply those concepts, plan your trades. But they doesn't come under HLQ zone strategy related trades. Of course, inside HLQ zone, you can combine PRZ zones and you can plan trades. But not 100% HLQ zone strategy. HLQ zone strategy, I didn't talk about any looking for PRZ zone new order flows, I did not tell. So that's why treat that strategy as a separate strategy. Why I'm not mixing? Because the statistics, 80% success rate statistics, I haven't collected for that PRZ zone strategy inside. They have a good success rate. And they are very powerful, no doubt in that. But the data, the success rate data, because HLQ zone strategy, we are climbing 80% success rate. Such kind of data is not available for PRZ zones. Sometimes they will violate. Maybe if they won't give you 80% success rate, so we can't include as part of HLQ zone strategy. That's why I made it a separate strategy. There is no doubt PRZ zone strategies are very powerful, no doubt in that. But I don't want to mix with HLQ zone strategy analysis. Okay, next one is a Naukri. Naukri is a daily zone. Rally based drop. Previously we fine tuned and also we got a trade also from this zone. From the fine tuned area, see, prices entered, how sharply it came down. March 25th. But is there any 25th March Naukri is there? 24th March is there Naukri. I think below there were some order flows. Maybe those order flows might have given. Or maybe a different zone, but whatever it is. Maybe it is far away from the zone. Our software might not have listed. But see how exactly fine-tuned area it entered and sharply came. This is the power of, maybe our software might not have listed this stock. But previously fine-tuned zones, exactly from the fine-tuned area, how sharply. This is the main advantage of fine-tuning the zones. That is what you learned in lesson 16 in your training course. Now we can't take any more trades. It is a tested zone. Some of you may feel this is a rally and two base candles and a drop candle. That way you want to see this is a new 5-minute zone but large zone. But actual order flow is picked up. Maybe next time again when it reaches, I want to plan one more trade, you may say. You may feel it could be a high liquidity zone. But as on now, it is a tested zone, confirming high liquidity zone based on LOTL. Some extent it may work, 80% level it may work, but not 100% level. HLQ zone confirmation with the help of software is 100% confirmation. So next one is PEL. Of course, Naukri today prices anyway did not go to this area. And next one is PEL. PEL is the one fine-tuned area, drop base drop, we narrowly missed. Prices reached up to here and sharply came down. Actually, there is a reason. Earlier, I didn't fine-tune this zone. Actually, here, go to the 15 minutes time frame. See, this is a 75-minute zone. Go to 75. This is a 75-minute zone. And moreover, this 75-minute zone is also high liquidity zone. The reason, previously once this zone is identified by our software, rally 1, 2, 3, 4 base candles, drop. This medium size candle is also part of the base. This 75 minutes. And when I fine-tuned this zone, I have drawn this 15 minutes rally base drop. But here also again you see, drop base drop is there, right? I didn't draw earlier. Why? I will show you, I will tell you the reason. Why I didn't consider. But today, exactly from there, it gave you a trade and sharply it came down. You may feel like you missed a very good trade opportunity. Even I felt the same. But why I didn't draw? Because I don't have a convincing 5-minute structure. So this is a 15-minute supply zone. drop based drop, no doubt in that. Go to 5 minutes time frame. In the 5 minutes time frame, you have a drop candle, you have 3 base candles. This leg out I did not convince. Because it is a medium size candle. That's why I ignored this zone. Suppose if anybody would have convinced this is a leg out is okay, if in case if you felt like that and if you have drawn a zone inside this is a 15 minutes, inside 15 let us assume you have drawn a zone like this, fine-tuned 5 minute zone. By assuming this leg out is okay for you, but for me it is definitely not okay. I am not happy with this leg out. For me it is a medium size candle. Many times such kind of zones will be violated. Maybe today it worked. You may feel like, okay, we missed a very good trade here. It would have given you a huge profit today. But you may feel like you missed the trade. But I am not convinced with this leg out. Because this leg out is not there at the time, I just ignored this zone. My focus is on this area. Anyway, this area is tested and also it is a pivot only. So next time prices will be violated and from this area it will pick up the orders and again it will give you a good profit next time. But today, according to me, this is not the valid 5 minutes, fine-tuned. 15 minutes okay, but 5 minutes zone, the candle is not a convincing candle. I just ignored. Next one is also candle is there, but it is like a looking like a base candle. Maybe it could be a failed ERC, but whatever it is. But somehow I didn't feel comfort here in this area. That's why I didn't draw the zone. Maybe some of you might have taken a trade here. You may say I already took a trade. But the reason why I didn't take, I'm not convinced with the leg out. Okay, fine. So this is the PEL. Next one is Supreme Industries. This is the one already explained previously. We have a fine-tuned, 2 fine-tuned zones here. We have already this, because this chart came from the previously drawn list. But today the price did not enter into these areas. You may ask why you didn't draw rally, 2 base candles and drop. I felt like it is again a medium size rally, medium size drop. I'm not comfortable here. So that's why I didn't draw a zone here. Maybe some of you might have convinced that this is a medium size because the body is between 50% and 75%. That way you might have considered this candle as a base, medium size leg part of the base, both together. And moreover, prices moved in a narrow range and imbalance started. That way some people might have convinced and you might have drawn the zone. Now go to the 5 minutes time frame. Here you have a rally base drop. Or maybe a rally base drop, either way. You might have drawn a zone. See again rally base drop is created. See again rally base drop is created. Maybe this could be high liquidity area. So that is the reason why today once again prices came, gave you the profit and prices sharply came down. Maybe some of you might have drawn this zone. You would have got a good profit. I'm not saying this analysis is wrong. Maybe you could be right. Because the candle having a body between 50% and 75%, you can consider either side. Depending on the situation, you may consider as a base candle or you may consider as a rally candle. That way, the 15-minute zone, 75 minutes. The 75-minute zone, you might have drawn this zone here. This is 125, 75. You might have drawn this zone. by considering. But for me, somehow I didn't consider with this structure. That's why I didn't draw. But looks like you missed a great opportunity, trade opportunity here. See, sharply prices came, gave very good profit. If anybody would have taken a trade from this area today, you would have got a very good profit. And moreover, what time prices entered in that area? Because that should not be in 9:15 candle. So this is the candle you got. This is morning 9:19 candle. In case if you miss next candle, another opportunity, 9:22 candle also, you would have got the trade, one of these candles. So definitely you would have got a trade. But why I did not consider? Because I am not happy with this 75-minute structure. This is the daily zone. I am not convinced with this 75. I thought maybe this is a rally and continuation, another medium size candle. Anyway, it is a clearly medium size drop. Here only this body it may not be having 75% body. Definitely maybe around 60% body will be there. Or 60 or 65. So according to my analysis, we missed the trade. Maybe those who are convinced this is a base candle and kept both this candle in the base, because the price moved in a narrow range here, and here imbalance took place. The lesson 2 concept, lesson 2. Lesson 1 you learned, prices move in a narrow range. Lesson 1.1 you learned, a very important principle. Continuation to that principle in lesson 2, you learned a imbalance. Earlier prices moved in a balance, now imbalance. So obviously this is the balanced area you might be having institutional order flow. That way if you convince and draw the 75-minute zone, today you would have got a very good trade from the fine-tuned 5-minute zone. Because we have good 15-minute structure, good 5-minute structure. And those who, in the reverse engineering, those who drawn these zones, reverse engineering, maybe you might have compromised and drawn this zone, rally-based drop at 75. Why reverse engineering? You first go to the 5 minutes time frame. In the 5 minutes time frame, here you will see a high liquidity zone. What is that high liquidity zone? So here you have 5-minute zone. High liquidity zone, again high liquidity zone. Multiple times it is tested. Aggressive trade set. Actually, aggressive trade setup we can plan. My God, how I've overcome this. Because if high liquidity, what basis I am saying high liquidity? Based on multiple testing, and also each time it is creating LOTL zone from this area. LOTL adds new order flows. See here new order flow is added. Again this time also new order flows are added. If I did not convince with 75-minute structure, maybe I would have considered this 5-minute zone as an aggressive. A high liquidity zone, 5 minutes high liquidity zone can be used as a aggressive trade setup even if it is not fine-tuned. Those kind of trades we should not miss. What is the beauty of high liquidity zone? They keep on providing you trade opportunities. One day it will expire. On that day the zone will be violated. Until then you will enjoy the profits. That way aggressive trade setup, at least this zone is valid that way also. But anyway, this point I ignored in my analysis. Okay, maybe I ignored, but HLQ zones did its work. See, if I make a mistake, I should not blame HLQ zones, high liquidity zones. High liquidity zones has done the work. The moment they reach, how they pushed the prices down because of this high liquidity. Let us assume even if it is not high liquidity, how you would have identified those who are doing in the reverse engineering, that is bottom to top down. Previously one of the videos I explained, if anybody is having confusion in fine tuning the zone, I told you do it in the reverse way. Go to 5 minutes, you draw the zone. Now go to 15 minutes and identify in this area any 15-minute zone is there. Now check. Here you have a 15-minute zone in this area, rally, 3 base candles and drop. That way what you do? Now you draw a 15-minute zone here. So 5-minute supply zone is inside the 15-minute supply zone. Now you go to 75 minutes. See any zone is there in the 75 minutes. Now here you have a rally. This candle is doubtful. whether to consider base or rally. By seeing these fine-tuned zones, at least you can compromise and draw the zone even if you are not convinced still. This is the 75-minute supply zone. Now you see, inside the 75 you have a 15-minute zone. Inside the 15 minutes you have a 5-minute zone, and that 5-minute zone is a could be high liquidity because of multi-testing, and also from the same area again rally based drop LOTL zone, again rally based drop LOTL zones are created, and today it gave you excellent trade from this area. Maybe this is qualified, if you are not convinced with 75-minute zone, this is still qualified as an aggressive trade setup. 5 minutes high liquidity zones can be used as an aggressive trade setups. But the only thing is, manually we are predicting 80% success will be there, manual prediction, to confirm it is a high liquidity. So today we would have got a good profit. Anyway, this is one successful trade. I didn't track this data in the Excel sheet, but I would have done this. This is valid, no doubt in that. Missed from my analysis. Okay, next one is Union Bank we discussed. Next one is Idea. Idea today, the last candles, it entered into the fine-tuned 5-minute zone. Idea, we have identified these fine-tuned 5-minute zones a long back, almost a month back. We have drawn this fine-tuned 5-minute zone in Idea. Rally, 3 base candles and rally. This is the zone. Almost 1 month back we have drawn this zone. And finally today prices entered into this fine-tuned 5 minutes area. Previously I explained, because I didn't draw this zone today. Already when I opened the chart, this analysis came. Till the last 10 minutes, prices also did not reach fine-tuned area. Anyway, you can't take a trade. Last half an hour or 45 minutes, you avoid the trade. So you can't take this trade. But this is the zone holded the prices. That is what you should understand. That is the power of fine-tuning the zones. Next one is Sonacom. This zone already we discussed. This zone we did not discuss. Previously, the supply zone we discussed. And this zone I didn't fine tune because it is a 2003 stock. 2023. Not 2003, 2023. It is a 2023 stock. 2023 stock we don't get the fine tuned 5 minutes data. 5 minutes data only 1 year only we get. So that's why anyway we can't fine tune up to 5 minutes. I just left it. But maybe some order flow might be here in this area. That's why throughout the day this is the area holded the prices. But anyway, we can't plan a trade without data. Wipro we discussed, and Cipla. Cipla is 75 minutes high liquidity supply zone. Drop base drop. Cipla have we discussed earlier? I don't know. But anyway, quickly finish how I fine tuned. We have a drop, 2 base candles and a drop. This is the way I have drawn. 15 minutes zone. And within the 15 minutes, 5 minute zone I have fine tuned. See here you have a drop candle. 1, 2, 3, 4, 5 base candles. Prices moved in a narrow range. And then imbalance took place in this candle. So this is the area we want to plan our trade. But today prices came somewhat close to this zone, but not good enough to plan our trade. Even if you add the entry buffer also, it won't be executed. So that's why we missed the trade today. Some more move it would have come, we would have got an excellent trade in this zone. See how sharply it came down after that. And the last one is Marico. Marico, I think we already discussed. I already explained. Marico. This is the one last half an hour. So this is the HLQ zone analysis video. So actually 2 trades would have been successful. The second one I will update the Excel sheet later because of my mistake. The aggressive trade setup are fine tuned also if you compromise 75-minute zone. But actually that is my ignored area. Ignored area for 5 minutes aggressive trade setup. But that is also qualified as fine tuned zone. If you compromise 75-minute zone and draw the zone, it is like you have a excellent fine tuned 5-minute zone. So those statistics I will add into the Excel sheet later. What is the profit, everything we have to calculate. Because Excel sheet is about performance of our HLQ zone trades. Okay, so this is the end of the video. Let's all meet again in our next video. Thank you.